Hello everybody, and today we'll talk about trading strategies for the beginners. Day trading is the act of buying or selling a financial instrument within the same day or even multiple times over the course of a day. Taking advantage of small price moves can be a lucrative game. It is if it played correctly. But it can be a dangerous game for new buyers or anyone who doesn't adhere to a well throughout strategy. Knowledge is the power, and in addition to knowledge of basic trading procedures, day traders need to keep on at the latest stock market news and events that affect stocks, the Fed's interest rate plans, the economic outlook, etc. So do your homework. Make a wish list of stocks you would like to trade and keep yourself informed about the selected companies and general markets. Scan business news and visit reliable financial websites. Set aside funds. Assess how much capital you are willing to risk on each trade. Many successful day traders risk less than 1% to 2% of their account per trade. If you have 40,000 trading account and are willing to risk 0.5% of your capital on each trade, your maximum loss per trade is $200. Set aside a surplus amount of funds you can trade with and you are prepared to lose. Remember, it may or may not happen. Uh, Set aside time too. Trading requires your time. That is why it's called day trading. You will need to get up most of your day, in fact. Don't consider if you have a limited time or spare. The process requires a trader to track the market and spot opportunities which can arise at any time during trading hours. Moving quickly is a key. Start small. As a beginner, focus on the maximum one or two stocks during a session. Tracking and finding opportunities is either with just a few stocks. Recently, it has become increasingly common to be able to trade fractional shares, so you can specify specific smaller dollar amounts you wish to invest. That means if Apple shares are trading at $250 and you only want to buy 50 worth, many brokers won't let you purchase one-fifth of a share. Many orders placed by investors and traders begin to execute as soon as the market opens in the morning, which contributes to price volatility. A seasoned player might be able to recognize patterns and pick appropriately to make profit. But for new buyers, it may be better just to read the market without making any moves for the first 15 to 20 minutes. The middle hours are usually less volatile, and when movement begins to pick up again toward the closing bell. Throughout the rush hours offer opportunities. It's safer for beginners to avoid them at first. Cut losses with the limited orders. Decide the type of orders you will use to enter and exit trades. Will you use market orders or limit orders? When you place a market order, it's executed at the best price available at the time, thus no price guarantee. A limit order, meanwhile, guarantees the price but not the execution. Limit orders help you to trade with the more precious, wherein you set your price for buying as well as selling. More sophisticated and experienced day traders may employ the use of option strategies to hedge their position as well. Be realistic about profit. A strategy doesn't need to win all the time to be profitable. Many traders only win 50% to 60% of their trades. However, they make more on their winners than they lose on their losses. Make sure the risk on each trade is limited to a specific percentage of the account, and that entry and exit methods are clearly defined and written down. There are times when the stock markets test your nerves. As a day trader, you need to learn to keep greed, hope, and fear at bay. Decisions should be governed by logic and not emotion. Stick to the plan. Successful traders have to move fast, but they don't have to think fast. Why? Because they are developed a trading strategy in advance along with the discipline to stick to that strategy. It's important to follow your formula closely rather than try to change profit. Don't let your emotions get the best of you and abandon your strategy. There is a mantra among day traders: plan your trade and trade your plan. Before you will start your trading activity, be assured that you are familiar with the charts, um, basic trading platform principles, and knowledge. Day trading is difficult to master. It requires time, skills, and discipline. Many of those who tried it failed, but the techniques and guidance described above can help you to create a profitable strategy. With enough practice and consistent performance evaluation, you can greatly improve your chance of beating the odds. For today, that is all. Thank you so much for your attention. I hope this information was useful. Stay safe. See you soon.